Global players in the insurance industry are among those attending the World Economic Forum in Davos, Switzerland. Climate change is affecting how insurance companies price risk. Earlier, SABC News economics editor Tshepo Mongoai spoke to Iain Williamson of Old Mutual CEO on the periphery of the WEF.
Global warming has been cast in the spotlight here at the World Economic Forum, but also its impact on the insurance industry, as we've seen some of the inclement weather that have affected the way people claim. We've seen the recent natural disasters in the US, and of course developing countries are the hardest hit. For more on this, we are joined by Iain Williamson, is the CEO of Old Mutual. Iain, thank you very much for your time. What are some of the discussions that we're having here? The issue of inclement weather has actually changed the face of insurance.
Yeah, in the insurance industry, this is not a new topic, but it is something that has received quite a lot of attention this week. I was actually in a discussion this morning at breakfast with global CEOs of the insurance companies around the world, and this is very much top of the agenda. And it's taking a few different forms. One is to say, clearly, claims experience and the risks that insurers face have escalated because of climate change, and whether it's fire risk, flood risk, it can be either. So a lot of the debate has been around, can you solve this problem by pricing differently, or do you have to start to not be able to insure everything, which obviously from the social role of insurers is a problem. So I think there's a discussion around whether the framework between the insurers, the reinsurers, and the role that government may need to play for the tail part that's not insurable ultimately, how does that all evolve over time? But obviously the best thing we can do as society, as a planet, is to do the work we can do to mitigate the impacts of climate change in the first place. So certainly the industry obviously buys into the science around the climate change agenda and is quite concerned with some of the developments that may reduce the level of political commitment to making the change that we see.
Talk about the reinsurance. We've seen South Africa in terms of how the reinsurance look at it. There's been a lot of developments that happened in terms of unrest and all that. How's the picture changed in terms of how reinsurers, whom you rely on, look and price risk for South Africa?
So actually, fortunately, for the South Africa specific part of it, the situation has largely normalized. So we saw a very big increase in costs for reinsurance at the beginning of 2020. Let's keep our dates right now, the beginning of 2023. The renewals at the beginning of 2024 more or less went back to normal. And I think, if anything, a little bit more capacity is coming back into the system. So I don't expect there to be any particular adverse reaction for any local reasons. The wild card in the system now is things like the California fires, because the global risk pool also affects the way that reinsurers think about the amount of capital they have available and the prices that need to be paid.
Let's look at town planning. We are limited in terms of space where to build houses, and we've seen that some new development happen in areas where that lying low, and that puts a risk. How are you navigating that space as the insurance industry?
So what we've done is two things. One is we've built some quite sophisticated climate models, particularly flood models in South Africa. Our flood model is honestly much more advanced than the fire model. The fire one is a bit more difficult. But what we've managed to do for flood risk is to geocode the model down to the level of street and house. So it's quite a detailed model. We use that in two ways. So one is to think about how we price for different risks in different places. But more importantly, I think we're using it as an educational tool to speak to local municipalities about town planning and about how they think about, where they allow things to be developed and how they think about the spatial policies around how town planning evolves over time. And the idea is that we've got a vested interest in almost preventing any silly decisions that will make risks worse over time. And we would very much like to partner with local government to make sure that we both, behave responsibly when it comes to that.
How are those discussions going? Would you say they're still starting or they're starting to gain traction?
They're definitely gaining traction in KZN specifically. That's where we've started, and I think so many of the local municipalities have shown good interest.
And then in terms of sharing notes with your counterparts, international counterparts, I mean, you build this beautiful model. Is there a lot of exchange of notes in terms of risk?
I think only in the principles. Obviously, some of the information there becomes a bit sort of proprietary. But many people are doing similar things around the world, and some of the if you like, the base levels of the model become commoditized. They become shared IP, and then you build layers on top of it, are individual.
Thank you very much. The CEO of Mutual. Of course, talking about a whole lot of issues in terms of how do you price risk in the insurance industry. We know that climate is changing and is bringing a whole new threat. And also the new developments, as in big cities, there's limited space. Some of the new development happen in areas that are quite prone to flooding.